The US hits its borrowing limit while the Treasury takes extraordinary measures to avoid default. But congressional Republicans and the White House are drawing battle lines in the increasingly risky debt ceiling debate, with both sides seemingly only becoming more entrenched. Hi, I'm your host, Weronika. Welcome to our new series, Weekly News, where we're going to provide you with relevant financial and business news from We Study Markets, including insights from iconic investors and billionaires. This week we break down: the US hits the debt limit, large layoffs in big tech sector, how Apple has avoided layoffs so far, why the culture of finding the right people is key to building an organization, by Jim Collins. Electric vehicles in the US. How long will Tesla hold on to its dominant EV market share? US hits debt limit. The US hits its borrowing limit while the Treasury takes extraordinary measures to avoid default. But congressional Republicans and the White House are drawing battle lines in the increasingly risky debt ceiling debate, with both sides seemingly only becoming more entrenched. Fighting over whether to boost Uncle Sam's $31 trillion credit limit is a game that, to Wall Street's horror, is played out annually in DC. To push the deadline back on default, the Treasury will likely employ some creative accounting. However, its options are expected to be exhausted in just a few months. Some ideas include minting a $1 trillion coin, issuing bonds with above-market interest rates, or bypassing the ceiling altogether by invoking the 14th Amendment. Another solution gaining traction would prioritize payments by canceling other spending to ensure coupons on outstanding debt are paid. This would essentially sacrifice economic growth and government functioning to uphold the full faith and credit of the United States. However, this would involve the White House picking and choosing which congressional spending items to honor, representing a constitutionally questionable power grab from Congress, which normally carries power of the purse over federal spending. The US is essentially the only country that requires a separate vote on raising its debt ceiling. Other governments usually assume that spending is necessary if legally authorized and relevant funds are made available. While still unlikely, a default would ripple across financial markets, almost certainly causing panic and throwing the global economy into crisis. Between the lines, the debt ceiling debate could be perceived as an avatar of what some have argued is a US democracy that's become increasingly polarized, ungovernable, incapable of tackling major challenges, and could be on the verge of outright destabilization. More layoffs in big tech industry. Alphabet, who owns Google, Microsoft, Meta, and Amazon, have all hit the tech industry with the dramatic news about the largest round of layoffs in the last months due to a challenging economic environment, making the wider tech industry witness altogether around 46,000 workers reportedly being laid off in the US-based companies. The only company among the tech big five, Apple, has slowed down hiring in some areas but hasn't announced layoffs yet. Apple's workforce grew 20% in the past 3 years, a far slower pace than competition. While other big players like Alphabet upped their workforce by some 17% in 2022 compared to 2021, Meta and Microsoft went even further with their new hires, adding 19% and 20% to their workforces, respectively, in the same timeframe. On a proportional basis, Meta has gone on both the largest hiring spree and has announced the largest cuts, with the 11,000 lost jobs at Meta accounting for 13% of its workforce. On the contrary, Apple has been a steady growth machine for decades, adding employees at a much slower pace than other large tech companies during the pandemic. The biggest challenge to taking control of your personal finances, improving your investment returns, and building a better future is just getting started. This means getting organized, having a plan, and being disciplined. As Mark Twain once said, "The secret to getting ahead is getting started." To break out the treadmill of slaving away each week only to have nothing left over, watching the savings you do have to get eroded away by inflation's vicious bite, or freeing yourself from the corporate grind requires that you master the conversion of time into value. To help you do this, we created a list of 4 simple steps to take control of your personal finances and life. You can download it for free by clicking the link in today's description. Alright, back to the news. How Apple has so far avoided layoffs. The company has about 65,000 retail employees working in more than 500 stores worldwide, making up about 40% of its workforce. And its workforce grew only 20% in the past 3 years. Its last big round of layoffs, including 4,100 employees, took place way back in 1997 when the co-founder Steve Jobs returned to the company. Major reasons behind Apple not following the trend of announcing large layoffs could be that it tends to run its organization lean, with relatively limited employee perks. Apple does not offer perks like free lunches for its employees in its campus area, which is a very common perk among Silicon Valley businesses. And it might reduce headcount through employee attrition by not replacing workers who leave. Last but not least, in order to continue creating meaningful performance and retention incentives, Apple Chief Executive Tim Cook has voluntarily taken a 40% pay cut for 2023, which is an unusual move that comes in response to shareholder feedback, according to the company's annual proxy statement. The decision puts Cook's target compensation at $49 million, down from $84 million in 2022. Even though his pay will probably exceed that target after bonuses and stock awards anyways, such a move is a statement in today's uncertain economic environment. Although Apple's core business has been resilient against broader downturns, and in its September quarter, Apple reported that sales of its most important business, the iPhone, advanced 9.7% from the previous year to $42.6 billion, beating analyst estimations, the company's business model hasn't been totally immune to the broader slowdowns. Revenue from its services business continued to slow, growing 5% annually to $19.2 billion in the September quarter. First who, then what? Why the culture of finding the right people is key to building an organization? Today we're going to shed more light on Jim Collins' excellent concept that applies to building great organizations and companies of all types, from startups to Fortune 500 companies, hospitals, sport teams, or schools. Jim Collins states that before pursuing any meaningful aim within our organization, we should ensure we have the right people working with us. The principle of first who, then what derives from the idea that your company can pursue the most visionary and spectacular goals as long as it consists of people who play different roles which match their skill sets and abilities. Collins explains that often companies look at their first priority metrics, which would be sales, profitability, or cash flow. He claims that there is one truly superior metric that towers above all others, the one metric you should track and the one that provides greatness for the entire enterprise. Imagine you drive a bus to a certain destination. That metric is the percentage of key seats on a bus filled with the right people for those seats. The bus represents our collaborative organization, and the seats are the different roles that people play. Your boss can travel anywhere and accomplish any task with great people in the right roles for their skill sets, personalities, experience, or leadership style. He explains that if the first 2 decades of the 21st century have taught us anything, it's that uncertainty is chronic. Your best hedge against unexpected obstacles is making sure you have the right partners on the other end of the rope. People who can adapt to whatever you encounter on the mountain. Since even the most visionary figures cannot always predict which idea will work and what's coming around the corner, having people you can rely on and who can easily adjust to the constant dynamic work environment is what will drive a company to success and preserve it from falling.
The question is not how should we solve this problem or what should we do? It should be who should I have work on it? If I get a cancer diagnosis, the question is not what's my diagnosis, my treatment, my schedule. The real question is, who's my oncologist? Who's the radiologist? Who's the surgeon? Who's the expert in this field? I got to find the who's to get the best what's. And it's a shift in the world to basically kind of, as you think about it, to basically say, it's part of making the shift from being a time teller to a clock builder, right? You make the shift from, I'll figure out the what's and tell people what to do, to I'm going to figure out the who's. And if I get the who's right, we'll figure out a lot of great what's to do, right? It's a first who strategy.
If you enjoyed this video, don't forget to subscribe to our daily newsletter, We Study Markets. Electric vehicle production in the US by brand. How long will Tesla hold on to its dominant electric vehicle market share? This is one of the biggest questions facing the US automotive industry. On the one hand, Tesla has a very strong brand, a loyal customer base, and a head start in electric vehicle production. And on the other hand, legacy automakers such as Volkswagen are eager to overtake Tesla. They have decades more experience building cars and are investing billions of dollars to catch up. Although the data from the 2022 Automotive Trends report shows that Tesla is still the dominant player in electric vehicle production, it won't be long until the rest of the industry catches up. To name a few, Ford is making impressive progress in its pivot to electric vehicles. Toyota's share is completely made of plug-in hybrid vehicles. And the Volkswagen Group is the largest producer of electric vehicles among legacy automakers. Will those efforts be enough to put in danger Tesla's market share? Despite all that, Tesla has set a lofty goal of producing 30 million cars annually by 2030, and the latest rumors suggest that their next factory will be located in Mexico. That's it for today's news. Remember to subscribe to our daily newsletter, We Study Markets, and subscribe to our channel. Thank you for watching.
Most of my money is invested in diversified portfolios, more similar to the way the magic formula works. And that's because that's a full-time job. We run a big research team, a big tech team to implement those portfolios. Some of it's long short, some of it's long only. I also have concentrated positions in some really good businesses that you would know, like Google and Microsoft, because some of those top names are businesses like I've never seen in my career.